Welcome back for my daily report market analysis videos with me, Richard, market analyst at Hantec on Monday the 6th of April. Going to look at dollar yen now, which has been corrective up until the last couple of days actually. Quite a sharp correction, but started to slow front end of last week and then just sort of bottomed out. It's interesting that we've now had two positive candles into the close on Friday. As the dollar seems to be regaining some strength. That market pulling up again today above 108.70, which was this reaction high here that we saw on Tuesday last week. We've broken through that. We're now starting to see these momentum indicators bottoming out again. It's a difficult one to really gauge because essentially the market has broken out. This is a near-term breakout above 108.70 on the hourly chart. You could argue 160 pips of recovery target, which gives you 110.30 on the move that has started to build a run of higher lows and higher highs. And you can see that through strengthening momentum, RSI finding support around the 50 mark and then pulling higher, MACD lines above neutral. So you've got higher lows, higher highs, little base pattern, pulling through resistance, old resistance becomes new support. You see these moving averages bottoming out and turning higher. Now this is interesting. We've got the 21 hour moving average, 108.80 area today as the basis of initial support, and it's just sort of held up at 109.30. And I'll zoom out to show you the significance of 109.30 because that was an old breakdown level from end of March. So how the market responds around here is going to be interesting, and it'll be interesting to see whether this is a sort of a renewed strength of the dollar on a sustainable basis, or it just turns into a choppy sort of trading range area. Momentum indicators would suggest certainly that the dollar has turned a corner, but now we need to see whether this is a corner that gets turned that results in continued buying pressure through the dollar, or whether it just turns into a range play. And for that, as I said, breaking out above 109.30 to 109.60 area, I think would be important because that's the old overhead supply of this top pattern. 109.60 is also the 76.4% fib level, 109.60. So an interesting area of resistance lies overhead, and it could be key crossroads here for dollar yen, but difficult to really gauge exactly where the market's going. But I think obviously on a very near-term basis it is trending higher, so you'd be looking at near-term positions looking positive, but being a bit more cautious on a little bit further out timescale. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.